You're trying to cut through all the noise, right? Get a real handle on what matters without needing, a finance degree.
Exactly.
That's what we're doing today on the Deep Dive. We've gone through the latest from Apar Industries, their financials, auditor reports, that corporate presentation, all from around May 14th, 2025.
Yep.
And the mission, basically figure out where they stand financially and where they might be heading based on all this info.
Precisely. And it's a good set of documents, gives us that snapshot, but also hints at their strategic thinking. We're connecting the dots here.
Okay, so let's unpack this. Where else to start but the big numbers? Q4 financial year 2025.
Right. The quarter ending March 2025.
Their revenue hit 5,210 crores. That's up, 16.9% for the same time last year? A pretty big jump.
It is, and what really stands out, I think, is the domestic business performance.
Ah, right. How did that look?
It grew by 31.4% compared to Q4 last year. Really strong. Suggests they're tapping into the Indian market very effectively.
Interesting. So strong at home. What about exports? They were a smaller slice this time, right?
Yeah, 31.3% of revenue, down from almost 39% last year's Q4. But the U.S. business just exploded.
Really? How much?
Get this, up 195.6% compared to Q4 FY24, and still up over 48% from just the previous quarter, Q3.
Wow. Okay, 195%. That's massive growth. You don't see that every day.
You certainly don't. It could be, a new product line taking off there, or maybe a big new customer win. Definitely signals a major opportunity for them in the U.S. Something to watch.
Okay, let's shift to profitability then. EBITDA post-open period Forex, that's the earnings figure adjusted for currency swings, gives a clear operational picture.
Right.
That grew 5.7% year over year. The margin was 9.3% in Q4, a bit lower than the 10.3% a year ago.
Yeah, a slight dip in the year-on-year margin.
But, and this is interesting, sequentially, quarter on quarter, that same EBITDA figure jumped 20.4%. What do you make of that?
Well, that big sequential jump suggests maybe some recent strategies are really paying off. The company points to a better product mix.
Selling more profitable stuff.
Exactly. Plus that U.S. demand surge we just talked about, and scale economies, basically making things more efficiently as they produce more.
So operational improvements kicking in towards the end of the year.
Seems like it.
And the bottom line, profit after tax, PT, for the quarter.
That came in at 250 crores, up 5.9% year over year.
Healthy enough.
Okay. Now looking at the full year, FY25 overall, revenue was strong there too, right?
Yeah.
18,581 crores for the full year. That's a solid 15% increase compared to FY24. Shows consistent market demand.
But the profit picture for the full year wasn't quite as rosy.
Well, the full year EBITDA post-Forex was up only 3.0%. And the PAT, the actual profit after tax, was down slightly 0.5%, landing at 821 crores.
So selling more, but overall profit didn't keep pace for the full year. Maybe cost pressures earlier in the year?
Could be. Or margin pressures, yeah. Even though Q4 showed that nice improvement, it raises a question about the full year dynamics.
Still, they did cross a big milestone, didn't they?
Yeah.
First time hitting a 5,000 crores revenue in a single quarter.
Absolutely. That's psychologically important, but also shows they've reached a new scale. Could give them more clout, access bigger deals.
Okay, let's drill down into the segments. Conductors seem like a big engine in Q4.
Definitely. Revenue there was 2,898 crores, up 24.5% year over year.
And domestically?
That's the really impressive part. Domestic conductor business surged 57.4%. Huge growth.
Wow. Really doubling down on the home market there.
It seems so. And overall conductor volume was up too by about 5.9%. So it wasn't just price hikes driving revenue. Exports were about a quarter of the conductor revenue in Q4.
And the U.S. again? Same story in conductors.
Yep. U.S. conductor revenue jumped 142.6%. So strong performance there, both at home and in the States for conductors.
And the overall picture for the full 12 months across all segments.
The disclosure mentions overall 12-month revenue grew 28.1% and EBITDA 13.4%, without breaking down every segment for the full year. Suggests broad positive momentum.
Okay. Moving on, what about returns for shareholders? Any dividends?
Yes, the board recommended a dividend. It's $1 per share for FY 2024-25.
Just $1 per share on a RS10 share value, so 10%.
Right, 10%. Still needs shareholder approval at the AGM, of course, but it's usually seen as a sign of confidence, sharing the profits.
Got it. Now, some people changes. There's a new whole-time director coming in.
Yes, Mr. Rishabh Kushal Desai. Appointed for 5 years, starting September 1st, 2025, pending approvals.
In the background.
Pretty diverse. Entrepreneurship, finance, He was involved in setting up their specialty oils plant in Sharjah. He was even on that Huron India under 35 list, so bringing in potentially new perspectives. His experience in Sharjah could be valuable. It does mention he's related to the chairman and another MD.
Right, which isn't uncommon in family-led businesses.
Oh, no.
Okay, auditors. Looks like they're sticking with Mrs. C&K and Associates LLP for statutory audit.
Correct. Reappointed for a second 5-year term, provides continuity. Seems the company's happy with their work. They audit other large companies too.
And new appointments for secretarial and cost auditors.
Yeah.
And internal.
Yeah, Mr. Hemang Mehta for secretarial audit, Mrs. Rahul Ganesh Shaloenko for cost audit for the upcoming year, and Deloitte Touche Tomastu LLP as internal auditor for FY26.
Bringing in Deloitte for internal audit sounds like a focus on tightening controls.
It certainly suggests a commitment to robust governance, yes. Having separate auditors for secretarial and cost functions also shows a pretty comprehensive approach to compliance.
And crucially, what did the statutory auditors, C&K and Associates, actually say about the numbers?
They issued an unmodified opinion on both the standalone and the consolidated results.
And for listeners, unmodified opinion basically means?
It's essentially a clean bill of health. The auditors believe the financial statements are fair and accurate, no major issues found, generally a good sign for reliability.
Good. Okay, let's shift gears to the corporate presentation. They highlighted their history over 65 years, global reach in 100-plus countries.
Yeah, that longevity and footprint suggests stability, established relationships.
They also talked up their R&D unit in Rabaul and plans for India's largest e-beam facility for cables. Sounds like a big tech investment.
Definitely. Investing in R&D and advanced tech like e-beam shows they're focused on innovation, staying competitive. E-beam can improve cable life and properties, a real differentiator.
The presentation also mentioned a focus on high-margin products. And back in 2023, their domestic export split was 45.55.
Right, so quite reliant on exports then. That focus on higher margins is key for profitability, and as we saw in the latest results, that domestic share has grown quite a bit recently, maybe a strategic shift playing out.
They've also invested heavily in manufacturing capacity, INR 741 crore between FY18 and FY25, across India and the UAE.
Yeah, that's significant capital expenditure. Shows a long-term plan to increase production to meet expected demand across their businesses. Diversified locations, too.
And the sectors they serve are really diverse. Power, renewables, railways, defense, auto, IT, real estate, industrial.
That diversification is a strength, absolutely. Makes them less reliant on any single sector's fortunes. Helps weather downturns and catch growth waves across the economy.
They position themselves as #1 domestically in renewables, solar, and wind cables. And that e-beam tech for house wiring, claiming 50-year life.
And they're the only ones in India with 4 e-beam facilities, apparently.
That sounds like a serious competitive advantage, especially in renewables.
It's strategically vital, yeah, given the huge push towards clean energy. And the e-beam house wiring offers tangible benefits, longevity, safety. Having that capacity is a big plus.
They also mentioned specific solutions, like for windmills and hybrid fiber copper cables. So not just making stuff, but solving customer problems.
Exactly. That customer-centric innovation builds stronger relationships, loyalty, potentially market share.
Looking ahead, they identified the big growth drivers: renewables, power transmission expansion, infra development, public transport, manufacturing, the whole China plus one thing, and telecom.
These are all major macro trends, right? Especially in India. By aligning with these, they're positioning themselves for growth.
They also pointed to rising power demand, 3–4% a year expected, driven by electrification, green hydrogen.
And India's big climate targets renewables pushed by 2030, net zero by 2070.
Which puts APA, with its lead and solar and wind cables, in a pretty sweet spot, doesn't it?
Absolutely. Huge potential growth runway there.
Also interesting, they mentioned HTLS conductors, high-temperature low sag, for upgrading transmission lines. They have a tech tie-up with CTC Global.
Yeah, that positions them well for grid modernization projects, which are essential to handle more power, especially from renewables, efficiently.
Okay, finally ESG, environmental, social, governance. Seems like they're taking it seriously.
It appears so. 3 ESG reports published. CRISIL ranked them 3rd in the industrial sector back in FY23. They're tracking water use, GHG emissions, rainwater harvesting, renewables.
They've got third-party validation of emissions, a B score from CDP, EcoVadis, silver status.
Right, and a wind-solar hybrid project expected to cut CO2 significantly. They've even started calculating Scope 3 emissions, that's the indirect ones in their value chain. Shows a deeper commitment.
It's becoming increasingly important for investors and customers, isn't it?
Definitely. It's table stakes for many now.
Okay, and just to quickly touch on the balance sheet and cash flow from the consolidated figures for FY25. Total equity around 0,500 crores.
Yeah. 4,503.54 crores. Total assets over 11,200 crores. Borrowings look relatively low at under 300 crores.
The revenue for the year consolidated was 18,492 crores, paid to euro 821 crores, and cash flow from operations.
Strong. Over 1130 crores generated from core operations. So let's financially sound, good cash generation.
Okay, so let's try and wrap this up. Key takeaways. Strong revenue growth, especially driven by domestic demand and that massive U.S. expansion.
Right. Strategic appointments in leadership, a clean audit opinion, a dividend proposed.
And a really clear focus on renewables and sustainability, backed by significant ESG efforts.
Yeah. This deep dive gives you a pretty good shortcut to understanding where APR is now and where they seem to be pointing.
Which leaves us with a final thought for you, the listener. Given APR's growth in renewables and all these ESG initiatives we discussed, how well positioned do you think they really are to capitalize on this massive global energy transition and the growing demand for, sustainable business?
That's the big question, isn't it? How that blend of financial performance and these responsible practices plays out long term, something to ponder.